Hey everyone, Paul here. I wanted to give an overview of my account, show you the stocks I'm selling options on. And really, my focus in my account is to sell puts. If I'm assigned, I will sell calls. So really kind of, basically a variation of the options wheel strategy. One of the things I like about selling puts in a market like this is that it gives me some downside protection on stocks that I would otherwise want to own. So when we're looking at these stocks here, so we have Chewy, Figs, Fubo, Meta, Netflix Pins, Hood, Scott's Miracle Grow, Sofi, and US Steel. These are all companies that I've done my research on where I would be comfortable to own them at the strike prices where I've sold my puts. And if we start up here at the top, like we can see that Chewy, I have this put that expires on July 15th, so it's currently June 20th. I sold the vast majority of these puts that we're looking at on June 10th, so about a week and a half ago. I sold these on what was a down day on a Friday. So there was a red day, there was some fear in the market, so I kind of took advantage of what I thought was kind of a good deal then. Of course, there ended up kind of being additional selling pressure that followed that, but what I wanted to do was still kind of put the money to work while there was kind of some opportunities out there. So while certainly it could have benefited me, or I could have been able to earn even more premium by waiting, I obviously had no idea, that it was going to play out the way it did, and I still think I'm positioned pretty well. So again, talking about looking at the top here, so Chewy, I would have to buy Chewy at $20 if it fell below $20 by July 15th, and they're currently at $28.70. So if we just kind of do a quick calculation on that, so 20 divided by 28.7, so Chewy would have to fall over 30% from where they currently are with their current market price, or at least with their close as of Friday. The market was actually closed on June 20th for a holiday, so it would have to fall over 30%, before I would actually have to take ownership. And again, if I'm able to buy Chewy at $20, I'm actually going to be happy with that. That being said, the options that I've sold, I was able to get $346 for selling 8 contracts, saying I'd buy them at that $20 by July 15th. And I've already been able to realize $78 profit on that. Although by and large, again, because we had that continued, downward pressure or additional selling pressure, overall, it would have been better off waiting. But Chewy was one of the examples where I actually have been able to accrue a little bit of that profit. Next one up is Figs. So when I sold this, I think they were closer to about $8 a share. I said I'd buy them at $7.50, and I got paid about $60 a contract for this one. So my break even on this one is $6.90. So even though I kind of sold it a little closer, to where it was currently at the time, I felt good about that relative to the break even. It's currently at $7.39. So again, with the $6.90 being the break even, I'm still about 49 cents to the upside right now on that one. But as of right now, I would actually have to buy 500 shares with my 5 contracts of Figs if this expired today. But again, I like where Figs is positioned. Even if this thing goes down to $5 or $6, the fact that if I have to take ownership of those, and again, sell some calls on those at $7.50 or even higher, I'm not mad about that position at all. We look at Fubo. So, the last trading day, they were up 10%. They're a little over 10%. So they closed at 282. Certainly, it's one of those stocks that has dropped a long, long way from where it was. And this was, well over $30, basically about a year ago. Now all the way down to 282. And by July 15th, I have this one that says that I will buy this at $2. But again, let's take a look at how far this can fall. So from 200 divided by this 282. So this is another one that has to fall about 30% from current levels before I would actually have to take ownership of it. Next, we come up to Facebook, Meta platforms. So I have 2 options on this one that are sold. One expires on July 1st, one expires on July 22nd. Both of these have a strike price of $155. At the time, Again, I believe that they were about in the 170s, like, mid to upper 170s when I sold these puts. They're down to 163. So that being said, the 155 divided by 163.74, it's only got about a 5% cushion, to fall before I would actually have to buy Meta at 155. However, that's another one of those cases where if I'm able to buy Meta at 155, that's a price that I feel very comfortable owning the stock. Once again, let's just say it kind of continues to blow past 155, maybe it goes down to 140, maybe it's 130. I still know I'm going to be able to get some pretty good premiums for selling calls at that 155. Or once again, if I wanted to pick a higher strike price, I think there'd be some room to do that as well. Netflix, currently at market price 175 as of the close. By July 22nd, I've agreed to purchase this at 135. If it goes below that, let's just take a quick look at how much room I have on this one. So the 135 divided by the 175.51. So Netflix would actually have to fall an additional 23%. And again, it's one of those things where in this market, certainly not impossible, but if I end up owning Netflix at 135, I'm happy to do so. I think that, just on an overall fundamental perspective, I believe the stock is worth more than that. My own opinion. It's also kind of crazy to think about it in one way, that this was a stock that was, what I think, was it over? Let's just take a look here. I believe it was up to about $700 a share for the 52-week high Netflix, over $700. And I'm currently saying that I can buy it at 135. Has to fall by over 23%. And on this one, so we can see for all of these, the cost basis is how much cash I actually received for selling the number of contracts that we see next to it. So I was able to receive $302 for that one. Next up, we have Pinterest. Closed a little over $18. I have an option, two actually, that are going to be expiring on July 1st. So, basically about a week and a half away. And one's at 14, one's at 14.50. So even the 14.50, if we do that math, 14.50 divided by the 18.18, that one's 20% away, and the 1400 is 23% away. So kind of, low 20% basically is how much Pinterest would have to fall before I'd have to take ownership. Once again, this is a price where I'm happy to own it. And for these, I had, about $109, a little over $109. I was able to get, for selling those. Next up, we come to Robinhood. And Robinhood, one of my, kind of, I guess, thoughts there is that, there is a certain worth to the users that they have. I think that there's a certain point where if they fall enough, I think that there's another brokerage out there that would be interested in basically acquiring Robinhood. There comes a point where they're just basically, too cheap to ignore. So, I did actually sell 5 contracts here that says that I would buy them at $6. Committing just $3,000. Nothing huge. Certainly smaller than, about the 30-something thousand or 31,000 I have committed for Meta. But I was able to get $106 on that one. If we see how far it has to fall, before I would actually take ownership, we do the 600 divided by the 719. So that one still has to fall, over 16% before I would be buying some Robinhood. Scott's Miracle-Gro. So this is one that, I really only got paid $48.70 for both of these contracts. Honestly, this was the only one of the bunch that really kind of caught me off guard. At the time, when I'm selling these options, I can see what the bid and the ask is. And usually the bid, is a pretty good indicator of the lowest amount I'm going to get if I execute at market price. This is one of those ones where I actually executed this trade at market price. Was expecting, I think, closer to like, $50 a contract, and really only got, 24 and change per contract. So I was getting less than I expected. That being said, I don't have to buy them until I go down to below 70. They're currently at 76.69, so still have over $6 of cushion there. Once again, I mean, this is a company that, I believe they actually, we can see here, they actually are paying a dividend, which kind of protects it to some extent. So again, just another example of, a company where I have that cushion. And of course, even when I sold this, I believe that, Scott's was maybe like in the 80s. So even though they are down to 76, I already have absorbed some of that loss and still have $6 to go before I would need to purchase them. Next up, we have Sofi. This is another one of those companies I think that, has been beaten up. At one point this was, over a $20 stock. Now it's down to $5 and change. In the last 52 weeks, I think it's actually got down to as low as $4.80. And, I have said that I will actually, by 6/24, I will buy, 100 shares at $5, and by July 15th, I'd buy, 1,200 shares at $5 if it goes below those prices. It's currently at $5.70, and combined, I've got over $300 in premium from that. We do the quick kind of calculation there. We can see that we have about, a little over 12%. So again, we're kind of not a ton of cushion there, but we still have some room before I would have to actually take ownership of this. And once again, I think this is something that I feel very comfortable, being able to say that if it does end up ultimately go down to $4, there's still going to be some room for me to, sell some calls at $5 and kind of continue to step down my cost basis on this. The last one up here, we have U.S. Steel. So I've got 3 contracts sold. This was, another one that expires on July 15th, which is kind of the most common date that I had selected. Market value is currently $19.89, and I would have to take ownership if it falls below $17. And this has kind of been an interesting stock. I mean, it really kind of went up like a rocket ship recently, and I think it was kind of in a lot of ways considered to be kind of a hedge against inflation. So I think it kind of rode that higher. It has been coming down, in the last, few weeks. And now, once again, it's below $20. We can just take a quick look at how this has fared in the last few months here. So again, it's been, pretty close to around $40 a share after going as low as about, 18 and change. And it's basically given all of that gain back, right? So we've been seeing a lot of the kind of, a lot of that volatility, but this one really kind of sticks out that it had this big rally, gave it all back by now. But once again, that's the stock that I think that, in my opinion, I think $17 is a good price that I'd be able to own that at. And I don't have a ton of exposure. Again, it's only 300 shares at $17 a share. So for selling all of these, I ended up collecting $2,205.15. We see that down here. This is how much I've collected in premium. Now, that being said, if I actually would have waited, I would have been able to get about $1,000 more in premium. So technically, the way I kind of look at this is kind of like the opportunity cost, right? So if I would have waited, I could have got about the extra $1,000. But that being said, I still was able to generate $2,205 on this account, and these were all for things that, basically were about a month or a little longer than a month. So I thought that was a good return at the time, which is, how I like to think about that process. All we can do is think about if it's a good deal at the time, which again, I believe that it was then. I still kind of believe, looking at it now, that it is. The only one, as we kind of looked at this, that I'm actually currently forced to buy is Figs. And again, I feel, very comfortable buying it at $7.50. Everything else, still has, anywhere from, 12 to 30% to fall, which again, in this market, very likely could happen. But, I sleep just a little bit better knowing that I have that cushion. And if these things, a lot of these expire, or if I start to get to the point where, as we get closer to expiration date, if I'm locking in 60, 70, 80% of the profit, I'll start thinking about opportunities to close those out, buy them back, and redeploy some of those funds. So I'll keep you posted as I continue to kind of navigate through this market. I wanted to give you an update about where my account is as of June 20th. Thanks so much.